Okay, guys, hope you're well. Just to clarify for the guys, and there was a number of questions about the buyer's sheet this morning, and I thought what I would do is I would add a couple of notes into it to help you read it a little bit clearer and kind of see what I'm looking at. And I'll just put a couple of basic indicators on a chart and give you something to think about. All right. So if you look at something like this, it's the Aussie dollar, and you can see that it is trying to move up. However, you've got a MACD that hasn't crossed yet, so that's telling you it's going down, and you've got an RSI that's moving up. So they are conflicted. So there's no sort of correlation, if you like. So what you have to do is you have to wait till they align. Okay. Now, the sheet does that through the instruments that it looks at. And sometimes when you look at a sheet on a morning, I might do it at about 8 o'clock, but I mightn't trade it till later in the morning. Some guys are just looking at it and immediately going, yeah, it's time to go and just dive in. Well, sometimes you have to wait. Yesterday was a great example of that. If you're looking for a certain bias, but the market is cascading down, then you have to wait for each one of those anchor charts to close. Now, it depends on what your anchor chart is. You might be micro trading on a 15-minute, but I like hourly and 4-hourly to get a bias anchor. And that's kind of why I showed you a couple of indicators to start with. It's about multiple confirmation. Now, if you want to use like a moving average, so right, I want to see the price below a 20, and then I want to see a 8 also below that 20 with the price below the 8, it's multiple confirmation. This is what the sheet does. It looks at various things and it pulls in the strengths. So you've got your strength, which is here. So it's telling you sort of the US is the strongest and the pound is the weakest. You then want to look for the change of strength. Well, that's gathered pace like there's no tomorrow, and that's losing ground. But what you've also got to remember is if something is stretched megally far, it could be at the point where it's going to snap, because so many times you get caught at the top of the market or the bottom of the market, which is why I work on a rule of 3. I use the bottom part to get in, the middle bit is the gap of air, and I use the top part to get out. Simple stuff. It's the pocket of air that I'm after. Okay. This pulls in what you want to be looking at. And then if they're in here, that means it'll give you an anchor chart here. And then you can look at it. So here at 9 o'clock, so this is the anchor chart it's looking at, the 9 o'clock anchor chart. So it starts at 9, ends at 10. It was a good trade. You could look for trades within that hour or thereafter. At 10 o'clock, sort of what's just been going on now, and it's kind of the example that I've just shown you, the Aussie dollar, for all it's telling you to buy it, it's telling you not to buy it within this time frame, this anchor period. Okay, so that's kind of what you need to look for. All right, and it's dead easy to do. You just go, right, I'm looking for an Aussie dollar. Where is it on here? Where it's an anchor. So I'll check this again at 11 o'clock and see if it's confirming. If it's not, then I'll look at it at 12 o'clock. But I'm waiting for a buy till there's confirmation. Hope that makes sense. I will be in and around today, but we back to it next week. Market should have settled down from being a small, short week this week. Because obviously we had bank holiday on Monday. Then we've had FOMC, Bank of England rate change, and today's non-farm payroll. It's been a bit wild, hence staying out of the market. Sitting on your hands is a good position. Hence, no trade. Don't make anything, but you don't lose anything. But it does pay off. All right, guys, catch you soon.